A Bitcoin miner just made more money renting GPUs to AI companies than it did securing the blockchain, while posting a $427 million quarterly loss. Meanwhile, the Senate is taking a second swing at sweeping crypto rules, and exchanges are quietly rewriting the fine print to dodge liability for risky tokens. TeraWulf, a publicly traded Bitcoin miner, a company that runs data centers full of specialized computers to earn newly minted Bitcoin, reported a staggering $427 million net loss in Q1. Its AI compute revenue, renting high-performance server capacity to artificial intelligence firms, actually outpaced its Bitcoin mining income for the first time. The quarterly filing reveals a broader identity crisis unfolding across the mining industry. When the machines that once chased digital gold can earn more powering chatbots, the entire business model flips. The Senate Banking Committee has scheduled a May 14th markup, a session where lawmakers debate and amend proposed legislation line by line on the Genius Act, the sweeping stablecoin bill, short for a digital dollar-pegged cryptocurrency, that already cleared the House. This is take two for the committee after an earlier attempt stalled out. The bill would create a federal licensing framework for stablecoin issuers, and the markup signals that crypto regulation is finally moving from think tank white papers to actual floor votes. Behind the scenes in Washington, 3 major crypto exchanges, trading platforms where users buy and sell digital assets, reportedly pushed senators to strip a provision from the crypto bill that would have barred them from listing tokens not readily susceptible to manipulation. Translation: the exchanges lobbied to keep their freedom to offer high-risk, low-liquidity tokens without legal exposure. Critics argue the removed language was the bill's main consumer protection mechanism, leaving retail traders as the safety net's last line of defense. A Duke Law lecturer argues World Liberty Financial, the DeFi project, short for decentralized finance, tied to the Trump family, issued a security, meaning an investment contract, that must register with the SEC. Lee Reiners contends WLFI, the governance token granting holders voting rights on protocol decisions, isn't a real governance tool because insiders control every meaningful decision. If regulators buy that framing, it could pull a wave of similar tokens into SEC oversight overnight. Bitcoin hit a wall this week as ETF outflows topped $268 million, the biggest single-day bleed in over a month. An ETF, or exchange-traded fund, lets traditional investors buy Bitcoin exposure through a regular brokerage account without holding the asset directly. Liquidations are piling up across exchanges. But the dollar index keeps slipping, and traders are eyeing the upcoming Fed chair appointment as a potential catalyst to reignite the rally. Switzerland's push to make Bitcoin part of the national reserves is officially dead in the water after organizers failed to collect the required 100,000 signatures before the deadline. The campaign would have triggered a nationwide referendum forcing the Swiss National Bank to add Bitcoin alongside gold and foreign currencies on its balance sheet. It is a setback for the movement, but advocates say they will regroup and try again under a fresh initiative. Kraken's parent company just filed for a full banking charter with the Office of the Comptroller of the Currency. The U.S. agency that supervises national banks, if approved, Kraken could offer checking accounts, custody, and lending directly, without leaning on third-party banking partners. The OCC has already greenlit similar charters for Coinbase, Circle, Fidelity Digital Assets, and Paxos, so the precedent is solid. Estonia's Financial Supervisory Authority has fired off a warning to investors. The crypto exchange Zonda Crypto is operating without a license in the country. The alert follows a separate investigation by Polish authorities and mounting user complaints about frozen withdrawals and unresponsive customer support. Estonia, known for its strict digital asset regime, is telling anyone affected to steer clear and report the platform to local law enforcement. That's today's crypto news. I'm bit-dogge. See you tomorrow.